Traders, welcome back to my YouTube channel. It's been an amazing week, and in this video we're going to talk about how to follow price action to help us identify high probability setups. Now we're only relying on the naked candlesticks that are printing on the chart because these candles are telling a story, and we need to use price action rules to help us stay on the right side of the market. Now I can see that we started the session with the bearish spike down. This black line divides today's session from yesterday's session, and I can see that we closed yesterday's price action with the bearish move down, and we opened today with another bearish spike, which is already giving this market a bearish bias, and this is important. Now this blue line is the 21 bar exponential moving average, which I keep on the chart as a supportive indicator only. It can help me identify the bias, and it also serves as a key entry point where high probability setup may appear. And notice what is happening. We have a series of lower highs, lower lows, working lower, below EMA, consistently rejected by EMA, and this is now a bearish spike in a channel pattern. So my goal as a price action trader is to identify a pattern, because these candles on the chart are always following a pattern. There's a reason to price action. It's not random, and we are going to follow using price action tools. Now, prices broke the channel and created move to a new extreme, which is according to trendline rule. But this price action overall feels a little bit too big. So this pattern is quite small. I'm just going to make sure to look for possible wider downtrend. So I'm going to use this low right here, this high right here, connected somewhere right here. And I can see that it's getting confirmed here and it's getting confirmed here. So I'm just going to copy it, put it at the bottom. And this also looks like a larger spike down and a channel formation, because the bias, the sentiment in the market is bearish. Now we have continuation to the downside, and we can see that right now the structure is mainly bearish bias. So my goal is to stick to short high probability setups. This would be a second entry short at the key entry point, or failed second entry long at the key entry point. Now we're bouncing to the upside, and notice we have new low formed. We have first entry short, pullback, second entry short. So we have a two-legged pullback. But notice price is pushed above EMA, and we triggered the second entry short below bullish bar. The second entry short triggered once we get a trigger below this bullish bar. So I cannot go short here because I want to see EMA rejecting prices if I want to go short. But we pushed above and it triggered below bullish bar, below bullish doji. So I cannot consider the second entry short valid. Once we bounce here and prices continue pushing higher, this is where I need to redraw the channel. It's right now getting confirmed. So after there's a break, I expect for prices to create new high, and only then I can potentially look if we can get continuation of the bearish bias. So notice what we have. We have a bullish uptrend, and my goal is to identify the channels not only for the bigger patterns but also for the short-term corrections, because I want to see when it is okay to sell, and it is okay to sell once there is a break and a new extreme for this uptrend. So we have uptrend working higher, first leg, pullback, second leg. You guys can see it is not measured. This was much larger, but we have a visual two-legged pullback. Market likes to move in pairs of twos, and this is indicating to me that the bullish uptrend played out, and it is safe for me to start looking to sell. And notice prices bounced and confirmed the key entry point. Now when I was watching this live, I had my key entry point slightly steeper. I had a little bit like this, which I had a break and new extreme, but this basically gets you to the same place. And you guys can see that while you're trading, you will consistently look for tweaking the channels, because sometimes you can draw just a little bit steeper. I had it like this, but it basically got me to the same point because I was still looking for these same setups to expect for prices to continue pushing lower. So this channel is fitting much better because it's getting confirmed here and it's getting confirmed here. So this is the key entry point where all the magic happens. This is where the big moves are generated. Okay, and your goal is to identify these channels. It is a learned skill that can be learned. And we have a new high, first entry long, pullback, second entry long, failure. Now second entry long is a high probability setup in the bullish trend, but we're not in the bullish trend. Bullish trend played out with the break and new high. It's confirming the main bearish trend, so we are taking a second entry long under wrong context, which means this is going to be a trap. So this is a trap setup and a high probability short, first entry long, second entry long, failure. Now it is above the EMA, so it is more advanced, but since it confirmed the key entry point and it is a trap, it is definitely worth taking. Look at the momentum, take high, reverse down, big bearish bar, uptrend played out with the break and new high, decent high probability setup. Now the safer way to play it is to just watch the confirmation here. If you're unsure, push below EMA confirming the momentum, and notice what we have, new low formed, first entry short, pullback, second entry short. Now, this right here is a second entry short and you're still in the bearish downtrend. I almost took this trade myself. I chickened out because the signal bar ended doji. But looking back, I was supposed to take a risk here because we also have small little, like a triple test here. You can see the small little resistance. Uptrend working hard, break, attempt to create new high. It looks like first leg up, pull back, second leg up, new low, first entry short, second entry short. Structure is clearly bearish. And this is a high probability setup at the key entry point. Now market continues pushing lower and notice prices are pushing above EMA. So I'm no longer interested in taking setups above the exponential moving average. I want to see prices to push back below, and here we have a first break of the downtrend, which means we expect for prices to create new extreme following the trendline rule. Okay, so I'm not looking for longs. As long as this downtrend is in play, I'm looking for short setups. I want to see prices to push below EMA, and we have a new high formed, first entry long, strong push below EMA indicating bearish momentum. Second entry long would be great failure here, but notice there is no tick higher above this bullish bar. There is no failed second entry long. I'm forced to sit here and watch this go without me. By the time I get a failed second entry long, it's all the way down here, which is far away from EMA. I cannot take entry far away from EMA. And notice what was made. New low has been reached. Break, new extreme of the channel. This extreme is lower than this or this, basically lower than the lowest low inside of a channel. So the downtrend played out and I expect correction or possible reversal. For that reason, even though I have new low, first entry short, second entry short, which worked, I cannot take this second entry short because I just have new extreme. Just because it worked here doesn't mean it's going to work next time. I need to wait if I want to still look for shorts, which EMA is confirming that the sellers are still strong because we're failing to push above EMA. After you have a break new low, you would expect for prices to push above EMA. The fact that we're not pushing above EMA is giving us information that probably the bears are a little bit stronger. So I would expect to get lower high, but notice lower high is too big, too close to these lows. Wouldn't consider it too safe. Now prices surprisingly kept pushing lower and lower, but taking short setups here is quite risky. It makes you believe that we're probably gonna push lower, but you cannot give into your common sense. You have a break, new extreme, so chances are we may reverse here. Now we have a strong push above EMA. Also EMA keeps rejecting prices, so you can see the possible reversal happening. However, notice the congestion, flat EMA, multiple bars stacked. This was still quite bearish. I want to be patient. There is no high probability setup at this point on. Just sit back and observe the price action, how it's going to react. Because we have a strong rejection up, pull back lower. I was actually expecting a failed second entry long here. New high, first entry long, pull back, second entry long, failure. But after we get this overshoot, by the way, it never triggered because there is no break below this bearish bar. But after you get an overshoot, you have to be careful. It led to a strong move up and prices continue pushing higher. So now the prices didn't continue pushing lower. And in fact, there's a massive bullish push up. This tells you that the structure may be changing. So if I'm going to use the first few swings, like here, this swing right here, first two swings will stop the trend line. Third swing will confirm it. It's even getting confirmed here. Just going to copy it, put it at the top. I can see that we have a big bullish spike up and we have an overshoot. An overshoot a lot of times leads to a break of a channel or straight up reversal. Now you can also see that I already drew my trading range because after there is a break and a new low for a channel, I automatically expect for prices to enter a correction phase, to enter a trading range structure. So I try to locate a trading range. You can put the trading range a little bit lower here, but that's not really the ideal way. It feels a little bit too low. You keep creating series of lower highs here and you can be putting it lower and lower, and that's not really how you want to put it. I decided to just select this high right here because this is where the trading range is starting to look, move up, move down, move up, move down. This is starting to have flat EMA. So this is where I start to identify trading range. So I'm going to keep it here. This is just a prolonged bearish movement and reversal happening. Now overshoot is possibly creating a break of a channel or straight up reversal. When you see overshoot, you have to be careful taking second entry long inside the channel because overshoot can generate strong momentum in opposite direction. We have first leg down, pull back, second leg down. Notice we have a new high here. We have a new high, first entry long, pull back, second entry long, which you're not interested. Counter reset, first entry long, pull back, second entry long. So it's getting a little bit tricky because we also have the trading range that may come into play. And we have an overshoot. So I was looking more for short opportunities, but I don't think you want to take the failed second entry short just yet. Why? Because notice we have first leg down and second leg down. So this looks like a two-legged pullback correction and downtrend played out. So taking a failed second entry long is quite a risk at this point on. However, after there is additional chance to sell, new low, first entry short, pullback, second entry short, and the EMA keeps holding, and even a possible downtrend keeps holding, this is now a decent setup for a quick little scalp, good momentum because it confirmed the failed second entry long. It is extra confirmation second entry short, EMA keeps holding, this resistance keeps holding again, and now this confirmed that the structure may be a little bit more bearish, that the overshoot may be strong. So you don't want to take the first failed second entry long because we have clear visible two legs. When you're taking a failed second entry long, you want to see it as a part of one move, okay? You want to see like a trend down like this, first entry long, second entry long failure. But here when you have separate two legs, that can indicate end of the pullback. I was expecting for prices to push lower, but I was wrong. Market continued pushing higher above EMA because this uptrend right here needs to get new extreme. The overshoot did not generate move in the opposite direction strong enough for reversal. So once you're pushing strong above EMA, the bias is changing. Prices pushed above EMA, new high, first entry long, pullback, second entry long, new low, first entry short, pullback, second entry short, failure. Above exponential moving average, above the support that acts as a resistance. So these are two high probability setups in one. Second entry long, counting from the highs, and the failed second entry short, counting from the lows. First entry short, second entry short, failure. The uptrend needs to get new high, and this is a decent bullish bar. At that point on, market continued chopping higher. Now you have a break, new extreme, and finally uptrend played out. Okay, and now you may be tempted to possibly even look for a wider uptrend like this. But notice how much empty room there is at the top. At this point on, it's getting two sideways, and notice the trend is about to roll over. The prices are not reaching here, and this is too wide for trading range structure. So we're just going to follow the price action by sticking to this short-term uptrend. Okay, this tight run is already wide enough for this trading range. Break, two legs to new extreme. Market is reversing. Another push down. There is no high probability setup. New high, first entry long, second entry long failure. That would be reversal pattern, but you already moved too far down. You're far away from EMA. You cannot take any short. But if I'm going to zoom back, I can see, okay, uptrend played out with the breaking new high. Strong push below EMA is confirming that prices are heading back into this initial trading range. This downtrend is in play. Notice how nicely prices are fitting neatly. And you have new low form right here. Uptrend pushing higher, break new extreme. My goal is to identify the channels even for the corrections, remember, because I want to know when it is okay to sell. We have new low, first entry short. There is no first entry short here because there is no trigger below this bearish bar. We have a series of bars working higher without any trigger below its low. Finally here we get a trigger below the low of this bar, indicating first entry short, pullback, second entry short right here. Uptrend played out with the break new high. This downtrend needs to get new extreme. You're coming from highs with the trend range, so you expect for prices to reach the target, and this is a second entry short. You're at the EMA, big bearish bar. This is the trade that I took, and this is a nice second entry short, high probability setup. You're not interested in taking a bunch of first entries, just these random pullbacks. You always want to wait for prices come to your key entry point and take the setup as a high probability setup. You can see we're always trying to look for a high probability setup at the proper key entry point because you want to learn to follow the price action, and you don't want to be taking premature entries where you're not sure with just a bunch of first entries. The high probability setup takes time to develop, and here downtrend is new extreme, uptrend played out, and is a second entry short at the EMA. So this is a high probability setup. Now, since I expect for prices to reach this support, and we're coming from the highs of a trend range, when I was watching this live, I connected these first two swings, and I instantly get confirmation here with the third bounce. So this is confirming a possible channel. I expect for prices to reach all the way down here, and the bias is still quite bearish, and we have new low, first entry short, pullback, another second entry short. At the exponential moving average, this is a high probability setup. Again, you ticked higher, instant reverse down, another great bearish bar, reversal bar, just like here, full bearish body, but this was too fast. I tried to take this trade myself, but my limit order didn't get filled because prices quickly created scalp. The reason why I'm so bearish, because we started the day with the bearish structure. We had a bearish bias already. We have a trading range, and this uptrend already have a break and new high. So since buyers already ended their move with the new high, and we're pushing back below trend range, and we start with the bearish bias today, the only logical solution for me is to expect for prices to reach the bottom of the trend range. So for that reason, I'm still thinking shorts, even though it's taking quite some time. You can sit patiently here because this may get a little bit too confusing for a lot of traders. You're exactly in the middle of trend range and there's a flat EMA. So just make sure you draw your short-term channels. You don't have to pick a top, just wait for prices to push below EMA to confirm the bearish momentum. Here we have new high, first entry long, push below EMA. I was expecting to get a filled second entry long here below EMA. By the time you get a filled second entry long, it moved already way too far down and you're not touching the EMA. Notice the gap between the EMA. This is concerning. This is exactly what can happen. Even if probably reach the scalp, you never want to be taking a chance. This can happen. You can get just stopped out to see it go where you thought it was going to go because it now is at the exponential moving average. And this is not a strong downtrend for me to risk entry far away from EMA. Okay, this is very range-like structure. So I'm not risking entry this far down, even though it probably worked. It's not worth it. I'm drawing the short-term channels, break new low. Notice another new low, first entry short, pullback, second entry short. We have another two-legged pullback, first leg up, pullback, second leg up. So you can see that the market is pushing lower with two-legged pullbacks, but this right here closed above EMA. So I cannot take it. Also, this downtrend just had a break new low. You can see that the prices keep pushing lower, so you're really thinking that you're going to reach these lows right here. But since it closed above EMA, can't really short it. I would like to see a lower high, confirmation felt, second entry short, but it never formed, market continue pushing lower. Okay, same thing right here, new low, first entry short, second entry short, but this is horrible. This is way too congested. Flat EMA, you get a micro lower high here, but notice it is still part of this congestion. Flat EMA in the middle of these bars, this is the worst type of congestion. When the EMA is in the middle of these bars, you cannot take entry like this. Way too stacked. Prices continue pushing higher, even though you have a short-term option working here, which is getting confirmed nicely. Are we expecting second entry long retest of new highs? Well, not really. This is where it gets a little bit more advanced because the bias is still mainly bearish. We still haven't reached the low here, and we still keep creating multiple lower highs. And also this is getting quite sideways, so you can even treat it as a potential trend range like this. The second entry long would have reached for a scalp. It is still better to follow the overall bias in this trend range, which you have so many lower highs. You have flat EMA, so this is looking like a trend range. So you'll be going long at the highs of the trend range. You have a new high, first entry long, second entry long failure. But by the time you get a filled second entry long, flat EMA in the middle of these bars, congested, and you have new low, first entry short, second entry short, unenterable. You cannot sell below bullish bar. And by the time you get bearish bar, it's way too big. Now market continues stronger to the downside. We have new low form right here. You have a first entry short, second entry short, which you cannot take because you have an uptrend in play. You have a break, new extreme, and this confirmed the trend line and formed at the EMA. I took this double trade myself. I barely got out for a scalp. This is not a good trade to take. Even though I got lucky here, had a winning trade, it moved too steep down. It is at the end of the push phase and the correction phase was starting here. Also, if you're going to zoom back, you can see you're at the lows of this trend range. So I got a little bit caught with this bearish downtrend, how strong it started to look. And it was at the key entry points, and the uptrend played out from this perspective, breaking new high, decent bullish bar, decent bearish bar. But this is not a great entry because you already moved too far down and you're at the quite extreme of the lows. However, I still like thinking that the market is a little bit too bearish because we came from the failed breakout, we're still pushing lower. So I'm looking for potential wider downtrend. You guys can see, I'm gonna copy it, put it at the bottom. It fits off the bottoms nicely. It fits off the highs nicely. The uptrend has a break, new extreme, and the trend line is getting confirmed here, which is indicating possible stronger downtrend. Strong push below EMA confirming the bearish momentum, new high, first entry long, pullback, second entry long failure, but this moved too far down, and notice how far away the body is off the EMA. Okay, this looks like an EMA tail trap where you just touch the EMA with the tail and there's so much gap between the body and the EMA. The bar is too big, you cannot go short here because you really want to see prices closing closer to exponential moving average. At this point on, you pretty much need the second entry short, new low formed, first entry short, pullback, second entry short, decent bearish bar, you still expect new low. After that you have a lower high, but once you get such a big bullish bar, something is changing here. You're starting to go sideways, you have a lower high, and then you even have failed second entry long here, new high, first entry long, second entry long failure. But you definitely cannot go short here. Even though it may work for a scalp, it's too stacked, it's too congested. Notice big bullish bars. You're also at the, if I'm going to extend the support here, you're basically at the support of the trend range. So once you see such a reaction here and you're not pushing on the first go, this is telling you that the support may come into play. However, uptrend played out, so now we're looking for longs. First leg up, pull back, second leg up, bounce here, first break of this channel, new high, first entry long, pull back, second entry long. I was about to mark this trade right here. This is a failed second entry long. You don't want to take a lower high just yet. New high, first entry long, pull back, second entry long, failure. Trap, because uptrend played out. You have 2 legs to new high. This is resembling trend range. You're at the highs. You push below EMA, it is inside of this downtrend, so this is a failed second entry long. Below EMA, off the channel, you expect new low of this downtrend, but eventually the main trend range came into play and there was not enough sellers for prices to create new extreme. There is no setup here, this second entry short, but the signal bar is pure doji, which you cannot sell below. Then you just have a sideways congestion, flat EMA once again. Stay away from these congestions. Strong bullish reversal up off the bottom of this trend range. Okay, indicating there is not enough sellers in the market to create new low. Buyers are stepping in. The support is holding. New high. First entry long, pullback, second entry long, but you cannot go long above bearish bar. Notice the second entry long triggered above bearish bar. When the second entry long triggers above bearish bar, you cannot go long. You need to wait for bullish bar. And once you see second entry long triggering above wrong bar, that's when you can possibly get a double trap. Everybody who went long too early on a wrong bar is getting trapped, and everybody going short too early on a failed second entry long is about to get trapped as well. And you have a nice big bullish bar, follow through, double trap, closing above EMA. This uptrend needs to get new high. This is a great setup. And after that, market was about to close. You guys can see you don't want to be pushing trading too late. This is the last setup I marked. There are a couple of these trades, but really trading this quite late may not be that worth it. When I go through a day like this, at first glance, it seems a little bit too all over the place. It seems too choppy, but in reality, it is not that hard. If you're just following the channels, you're following the rules, and you only wait for the decent setups, it is completely normal to sit through a couple of these areas where maybe you're not getting filled, it's moving too fast, getting a little bit too choppy. But eventually, if you're following the rules and you're drawing these channels, the rules are going to be followed. There's always a channel where there are high probability setups. Just wait your turn, wait for the channel that you identify correctly when you understand the bias, and take second entry shorts when the channel is working lower. When it gets too congested, you just wait and sit. And once again, after you identify your channel, your pattern, this is where you can start taking high probability setups again. I wish you safe trading.